Is it time to sell first and ask questions later? Stocks had a terrible week, and we can see that here with almost every sector being down and large cap stocks being really big down. We're also back into fear. So what exactly do we do? Let's have a look at the charts here really quickly because we're starting a potential trend change. So far in the S&P, we have one lower high and one lower low. We also want to be mindful of the March highs here at roughly 525, because if you look to the NASDAQ, it already has two lower highs and two lower lows. So what does that mean? It means with one more lower high and lower low, we got a trend change. We got a sequence of candles or a pattern. Also note where we are. We're already at the March highs. So there's a very simple question we're going to look at charts at the end of the show, which is just that we're closing at or near the low of the week. So if yes and if no, very easy for us to prepare notes. But why exactly are we where we are? Well, after a week of risk-off mood sweeps across different markets, including commodities, treasuries, and stonks. So everything's down. We're turning into stinks, right? Stink market. Recession probabilities are diverging across different asset classes. So people are betting on different odds in different sectors. And Jerome Powell's going to have a really big decision, not this week coming up, but on the 18th, Wednesday, September 18th. Fed must decide if quarter point cut will be enough for the workers. Why? Hey, we'll talk about that in a moment. But this week was all about NVIDIA. Biggest single day wipeout of any stock in the history of stocks. That was a $279 billion wipeout on September 3rd. If we look across here to the top five, NVIDIA. Whoa, NVIDIA, calm down. And interesting too, 4 out of the top 5 are in 2024. Apple's event's going to be on, I think it's on Monday. So that's going to be on 9/9, which is, that's going to be tomorrow. It's currently the 8th. Yep. And this will be very interesting because big tech's AI device push. Samsung launched their phone, didn't really do anything. Copilot by Microsoft. And we had Google Pixel 9. Well, Apple's the king. So if there's going to be really something innovative, we're probably going to see that here. What I'm really looking for is going to be use cases because AI is not new. So we really want to see what people can do with a new device. Keep in mind, Apple is probably not going to be charging for these new features, which means they need to sell devices to make money. And again, they are the king of hardware. If you look at history, though, Apple's monthly stock performance over the past 10 years shows that September, when they launched the iPhone, is usually the worst month of the year. Oh, boy. So this is going to be on Monday, you said? That's going to be tomorrow? Yup. So if we're closing at or near the low of the week, like I just talked about, what does that usually mean? Usually means downside pressure is going to build up and it will get released. So the probability or the odds that we do print a weekly lower low are high. The question is going to be whether or not we remain below that. Again, if yes or if no. So there's your tease in roughly 3 minutes. If now we push forward, if we're truly going to be going like a lot lower, how is the market currently valued today versus the 10-year average? Hey, it's a little bit expensive, but like, hey, go down by 10% and we're right back to the 10-year average. I would say that's pretty fair. I think the economy is stronger than people think. Here's the other thing that'll be particularly notable this week. If we look at what happens on Wednesday, we're going to be getting CPI coming down to 2.6. Hey, this is getting really close to 2%. In Europe, had it at 2.2. So pay attention to that because that'll be important. We're also going to have the ECB rate decision on Thursday. There's a 10 and 30-year auction as well. But to make it really simple, Apple kicks it off. Then we have a presidential debate. Then we got CPI, which is supposed to be a lot lower. Then I'm going to watch for the reaction of the 10-year auction and the 30-year auction. Why? Hey, if inflation's going down a lot, we should see good demand for this 10 and 30-year auction.
The increase
and
in
now with that in
unemployment
mind,
is
let's listen to a clip here from Claudia Som.
the increase in unemployment rate is in a range where we have historically been in recessions, right? But that's a history, that's a past. We're not in a recession right now, but we do have a weakening labor market, right? So like that's the important takeaway, but like not a recession right now, but a risk, always a risk.
Claudia, over the weekend, you'll be at some fancy cocktail party and somebody's going to come up to you and say, hey, Claudia, how's the U.S. labor market? What's your response?
It's not headed in the right direction. This is the thing I'm most concerned about. Again, just, the numbers, like the numbers themselves, okay, fine. It's just things have been slowing and weakening, and not because I am, hair on fire that a recession's around the corner. Right. I'm really concerned that we're losing, slipping away of a really good labor market. And we need this as good as it gets. And there should be nothing weaker than what it takes to get inflation down. And we are, the train is still moving and is not in the right direction.
All right, that's a pretty simple story there, and that's Claudia Somm, which everyone quotes from the Somm rule. So if now we keep that in mind and we look forward here to inflation, again, coming down to 2.6, that's really close to the Fed's target. That's what she's talking about. And what I really just want to preview here before we look at a few charts, again, first, if you don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly appreciate that. A lot of people are focusing on the probability for a 25 and 50 basis point cut. And this is going to be the debate because everyone has an opinion. This is what it was like before the jobs report on Friday. And then after that, it's now down here. It's up here to 70% chance of a 25 basis point cut and 30% to 2 cuts. So what does this really mean? Well, it means that, again, this is going back to December. Here we see an article talking about why the Fed's goal of a soft landing looks a lot closer. Well, now they're a little bit behind the curve, and the market is definitely worried about that. We'll talk more about this next weekend, but here I did a bit of research to show how long the Fed has paused before actually cutting. And here we're just looking at recent history because there's not really pauses here. They go up, they go down. It doesn't flatten out. So in 2000, 2008, 2020, that's where they all paused. 6 months, 12 months, 7 months. And if they cut in September, that would be 12 months. So to make this really simple, back in 1995, they cut once and then paused for 3 meetings. Well, that's not what the Fed's doing right now. They've held too high for too long, and they are too data dependent. Just like a prescription, you need to adjust the dosage based on feedback. We've not done that at all. Why? Well, according to their own formula, which gives us a really simple calculation here, sufficiently restrictive means core PCE plus 1.6. The Fed funds is at 5.3 right now, and with inflation at 2.6, and again, CPI also down to 2.6. That means they're about 1% too restrictive. If we're currently going to get 3 cuts in 2024, that means that by early 2025, they would be sufficiently restrictive. The reason why this gets a little bit tricky as well is because the market is overhyped on what's going to happen for the first cut, 25 versus 50. I think that's the wrong way to look at it. I'm more focused on the reaction to the news because if there's a really big pause, there's usually a really big recession. The bigger the gray area, the bigger the recession. So we're not in recession right now. But the really important question for me is going to be what's going to happen here. So if we have a look at the note, what it basically shows here is that GDP is still really strong. So if we're going to go into recession, the earliest that could start would be in Q4 of this year, because as of right now, Q3 still looks pretty strong. It's at 2%. So if we get to sufficiently restrictive by the beginning of next year, the problem is that after they do their first cut, 4 months and 5 months after, we're already in recession. So there's a lot more notes here, and not to make it overly complicated, pause the video or subscribe, and we'll go through this more this week and at the end. But what the Fed's going to have to basically do is decide whether a quarter point will be sufficient for workers. Everyone's going to have an opinion on that, and frankly, I don't think it really matters. I think the Fed is in a little bit of a bind right now. And to go back to our notes to make the video really simple, if we go back here to the S&P 500, we talked about a key monthly area, and that was at 550. So now that we've lost our 550 area, yeah, we could go as low as about 510. I'm looking here to the July low at 537 first, and then I'm looking to the May high at 533, and then finally here at 525. So to make it really simple, when we look here to a pink line, that means pivot. So if we now fall below 525, I just told you we blew out all the other monthly support. What are we looking for next? Hey, we're probably looking for a slam down here to roughly 515. 515 is also important because here on the daily chart, the 200 DMA is at 513. It's going to curl up more, and it'll be at roughly 515. So that number is going to be increasingly important. It would also be a higher low relative to the low we established here in August. So what would that mean? Again, let's make it really simple. It would be a higher low or a bounce off a monthly higher high. Again, that would be a lower low if we go to 510. All right, so let's read the note one more time, and then we'll just leave it there. So what this basically says is that because they're both closing at or near the low of the week, hey, if Apple's going to suck, we're going to find out in the morning on Monday. But into the open, we're probably going to have that lower low. So since it's going to print, now all we want to do is look at whether we remain below the low. So if we're red on the week, bad. If we're green on the week, good. We have to wait all the way till Friday, though. And I just showed you the data that'll drive that. It's inflation. It's the reaction to it. So if we form 2 lower lows, but we actually recover to form a failed breakdown, that'll be exactly what we had last week. And then we still have to put in another candle on the S&P to truly confirm a trend change. If we have 3 times lower highs and 3 times lower lows, that's bad, because as of right now, we're already forming a pattern, right? 2 lower highs, 2 lower lows, So there you go. That's it for today's video. Subscribe on the left or watch the video on the right, and I look forward to seeing you on Monday. Thanks so much.